First session of the week, not a bad one.
James, an incredible session today, and the most incredible thing about the session today was that we saw $8.7 billion worth of stock being traded on the ASX. Now, this is on a day where we see the US on holidays. Tonight is the President's Day holiday, so an incredible day, and really reinforces this rally that we've seen. We've seen another update, up by 0.6% on a day where two of our biggest stocks traded ex-dividend. That's Telstra and Commonwealth Bank. If we have a look at Telstra, it traded without its 14-cent dividend, but it didn't fall by 14 cents. It only fell by 6 cents. And if we have a look at Commonwealth Bank, it went ex $1.64. It only fell by $1.25 today. In fact, the banks were standouts across the board. We saw Westpac up a massive 3.3% in one session. In fact, most sectors on the market were trading higher. We did start to see a bit of weakness in some of those defensive areas. We saw the telecom sector being dragged down by Telstra going ex-dividend, and the property sector in the red. But the other sector which actually finished in the red was the material space. It got hammered. The gold stocks were absolutely obliterated on the market today. And if we have a look at gold prices, what we are seeing is a bit of uncertainty in terms of price. We have a look at a longer term gold chart. This is what it looks like, and this is a gold price chart from 2001, and you can see it's been a phenomenal rise for gold prices, which have moved from below $200 US an ounce to above 1600 US an ounce. But recently we start to see weakness. Now, the yellow line is just the 200-day moving average, and at the moment the gold price is under that 200-day moving average. On Friday, we saw another fall of 1.5% on the back of some of the gold bugs getting scared off. George Soros is said to have sold in one of his funds some ETF gold holdings at the end of last year. And the gold miners on our market, Newcrest Mining was down by 5.4% today. We saw Kingsgate down by a massive 10%. Beetle as well as Silver Lake Resources down by more than 7% on the market. So that part of the market wasn't pretty, but otherwise a fantastic day for the Australian share market, up by 0.6%, and it's got to be a record $8.7 billion being traded.
Some of these, the bank price is looking a little bit too inflated.
Well, we know what has been driving the bank's share price isn't so much earnings growth, because we knew that was going to be anemic. It's the dividend growth that we are seeing, and that's a key theme across the market. It's not just in the banking space. We're seeing that with the miners. We're seeing it in the staples. We're seeing it in the healthcare space. And I think this is one of the key themes to emerge this earnings season, the fact that we haven't seen that dividend trade being dead, and if anything, we are seeing the top blue chip companies aiming to boost their dividend. And if we have a look at some of the biggest stocks on the Australian share market this earnings season, we've seen Commonwealth Bank come out and increase its dividend by 20%, $1.64. We have another look at another big stock, Rio Tinto, really surprised the market when it came out and it boosted its dividend by 15%, coming in at $1.67. But even in the staples area, Wesfarmers coming out to boost its dividend to 10 cents to 77 cents. And the healthcare space, CSL, I mean, this isn't a stock we usually go to for income, but it managed to boost its dividend payment by 33%, up to 50 cents. So what we have seen is higher dividends, and in an environment of falling interest rates, official interest rates here in Australia, it does look like investors are still attracted to that trade. And it's been a key theme, and it's been a key driver of especially the banks, but other big stocks on the market as well. And we saw that in today's market, where we did see a bit of an exit out of CBA because it was trading ex-dividend, and Westpac up by 3.3% in one session with no news. That's an incredible performance.